From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for December 16th, 2015. Today I'm going to be doing a general overview of each of the major U.S. currency pairs in anticipation of today's highly anticipated and likely highly volatile news. 2 p.m. Eastern U.S. time, of course, is the federal fund rate statement, the FOMC statement, that will likely, at this time, anticipated that they're going to be raising U.S. interest rates. So if that's the case, we will likely see high volatility today around that news. Prior to that, I don't anticipate a lot of movement as the market just kind of sits and waits for that 2 p.m. hour. But there are a couple of trades that we've been talking about over the past few days. We'll talk about those, how you can handle them if you're still in them as profit, and looking to protect ourselves as we approach that news and what we might expect after that news. So first off, starting here on New Zealand dollar, this is a currency pair that we've been trading for the past couple of days. You can see a trade going at the very bottom of the chart. 67.95 was the sell price. You can see currently sitting about 45 pips of profit. So the stop loss has been moved in to 5 pips of profit. Can't lose on the trade. So that's a good piece of information there. Now you could move it in farther if you wanted to, but definitely protect profit if you're still holding it. So we've also already closed some of the profit on the trade. Long-term down red trend line, we've been talking about that quite a bit over the past few days. This is the daily time frame. Zooming in a couple of times, we saw the market come very close to that trend line, came up 786 fib at 67.95 of the previous down leg, stayed underneath the last high, so that was the sell into the blue shaded area up here close to the red trend line. Of course, has come down to the pink zone into the 67.40 level, protecting profit at this time. 4-hour time frame, again, the sell was up here at the blue shaded area. We're at the pink zone. Look at the market just hanging out in here. Of course, with the anticipated U.S. news, if they do raise interest rates as expected, fundamentally, you expect this to go down. We had the cut of interest rates in New Zealand a few weeks ago. We have the potential raise of interest rates today. We would expect that the New Zealand dollar will go down on that raise of interest rates out of the U.S. So that's the anticipated direction. Could we see some whipsawing of volatility prior to that? Sure, of course we could. So protect profit if you have it, and look for new opportunities as the market absorbs that information later today. AUDUSD, the Australian versus the U.S. dollar. This is another currency pair we traded a few days ago. I am out of this trade at the current moment. We sold it up here into the 72.45 level. It's just for the past 3 days been hanging out as support on top of 71.90, 71.65, the orange shaded area. At this current point, it doesn't become very encouraging to sell it or go short because you're sitting on top of support. Just take a look at the past few days, finding support here at the orange shaded area. Doesn't mean it's going to go up. As you can see, it's just kind of hanging out there on top of that. But it doesn't become an opportunity to go short. The only opportunity to go short would be either a rally back to resistance or the breakdown underneath the orange zone. If it does that, then we look for the continuation down here towards the 7100 level. So with the anticipated U.S. news, the high volatility, if the market reacts as expected, we see a strengthening of the U.S. dollar on U.S. raise of interest rates, then we look for it to at least go down to 7100. If not, a breakdown of 7100 takes it much lower and maybe even a new low for the Australian dollar. If the market surprises us, if the Fed surprises us and does not cut interest rates, I would anticipate, just like on the New Zealand dollar or here on the Australian dollar that we just talked about, we look for this to take a turn back higher. For every currency pair, we would look for the opposite reaction if they don't cut interest rates. So it goes higher if they don't cut, lower if they cut. Very likely highly volatile prior to that news, but clearly sitting on top of support at 71.90, 71.60 right now for the Australian dollar. Moving on over to the AUD, we can see past couple of days have been pretty positive here for this currency pair. You can see finding support down into the mid 120s a few days ago, has moved back above the 100 daily simple moving average. Take a look. We were underneath it. Now we're back above it, sitting above the 121.50, 55 level. That's the pink shaded area as your current support right now as it sits on top of there. Next resistance, of course, is the blue zone that sits up here closer to 122. 125 to 50. That's the blue shaded area. Support obviously right now is sitting down here at the yellow zone. So a breakdown of the pink shaded area, a breakdown of the support likely goes back down to the yellow zone, or actually much, much lower if we don't get the interest rate cut raise that we're looking for. If they do raise interest rates, I would anticipate a little bit of a bullish move here for this currency pair, back to at least to 122.50, but likely much higher, and even a new high to be made if that's the case. So zooming in here a little bit on the US yen. If we get the cut, or sorry, if we get the raise of interest rates, we likely look for this to go up. If they don't raise, it goes back down, challenges new lows here. But right now, sitting on top of support, 122.55, back above the 100 daily simple moving average. USCAD, we can see we've just been kind of hanging out up here into the mid 1.3700s. I think that's even easier to look at this currency pair, actually keeping an eye on the uptrend. We've been in an uptrend. I would anticipate the uptrend continuing. Taking this currency pair down to the 4-hour chart, because look at the pattern that we've seen set up here. Resistance down here at the pink zone, a trend run. Resistance, congestion here in the yellow shaded area, a trend run. Congestion here, resistance into the pink zone, and now the anticipation, especially if we get the cut or the raise of interest rates, keep getting that backwards. If we get the raise of interest rates, we look for continued support and a rally at least into the 3800s, which is the green shaded area up here at the top, if not further than that. So you see 3840 to 3920 is highlighted in green. We looked at that yesterday in the live trade room. That's the expected direction with the raise of interest rates in the U.S. No raise of interest rates, could see this take a turn back down, back underneath 36.85, takes a tumble back down into the 3500s or lower for the US CAD. Taking it on over to the GBP, it's been a significant couple of days here. This pair has probably been the biggest mover all week long so far. We saw the fall from all the way up here into the 5200s, down now into 1.5 thousand. Wow, what an extensive day we've seen. We actually sold this currency pair a couple of days ago into the orange shaded area. 51.75 was the sell price 2 days ago. If you took that sell and are still in it, that's good profit right now. From 51.75 all the way down to the current market price, you're sitting with 175 pips of profit. You should, of course, protect profit, close profit prior to that interest rate news. If we get the raise of interest rates as expected, we look for the continuation of this free fall underneath 5,000, takes it back at least likely to 4,900, the last low that we see here into the orange shaded area. If not, a breakout underneath the 4,900 sends it down towards 4,800 for the pound dollar. That's if they do what we're expecting and do raise the interest rates. If they don't, I expect negative sentiment for the U.S. We look for a turnaround, likely even a challenge back towards the top of our range that we've been studying. Let me zoom out one time. The red trend line, the black trend line. I would look for a test back to the top of that range if they don't raise the interest rates. If they do, we'll look for a tumble back down towards 4,900 for the GBPUSD. Euro dollar, of course, just been hanging out 1, 2, 3, 4, 5, 6 days, just hanging out between the blue zone and the yellow shaded area, likely just kind of hanging out, waiting for this interest rate news that everybody's been anticipating. Of course, a raise of interest rates as expected. We look for the turn back lower. We've been discussing in the trade room over the past few days the fact that this move higher likely could just be part of a correction phase, waiting for this interest rate news, selling at a higher price, looking for it to go back down for the larger market as a whole. If it's more than a correction phase and we don't see the Fed make a move on interest rates today, we'll likely see the turn back higher, a push back above the moving average, a back above the blue zone, back above 1.1, likely looking for a turn, maybe even back up here towards the 113s again. The raise of interest rates, as expected, likely looks for the beginnings of a pullback down and a retracement of this move that we've seen, and even a push underneath the 1.0500 level could see a new low being made back down into the 1.0300s for the euro. So really, at this point, we need a breakout, and we'll watch for the news, which direction it breaks out. No move by the Fed likely makes this move higher. A move by the Fed to raise the rates as expected likely starts to see the pullback down for the euro dollar. Moving over to the US franc, just the opposite. Everything's just the opposite. You see support at the green zone, a breakout underneath there, and no move by the Fed likely pushes through the moving average and starts a free fall for this currency pair, a continuation of the correction phase we've seen for the past couple of weeks. If they make the move as expected, starting the journey back higher here for this pair. Back above 9,900, we're back to parity, likely making a move above parity, sends it back up towards the highest high on the chart for the US franc today. So again, that's the levels that you could be watching for the day today. Highly anticipated news. Protect profit if you have it. Likely you don't want to enter any U.S. pair trades prior to that news today because of the potential high volatility coming up at 2 p.m. Eastern U.S. time with the federal funds interest rate change.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.